You know, trying to figure out why the stock market moves up or down on any given day, it's one of the toughest puzzles in all of modern finance. We blame interest rates, we blame political news, but what if I told you that one of the biggest culprits was the sun? Yeah, you heard that right. Let's get into it. I know, it sounds like something straight out of science fiction, doesn't it? The idea that some eruption happening 93 million miles away could have anything to do with your retirement account, it seems completely absurd. But get this, a really fascinating paper from the Federal Reserve Bank of Atlanta suggests we should probably take this question very, very seriously.
So, let's start with the central mystery, right? The unpredictable, sometimes totally irrational swings of the stock market. For decades, experts have tried to pin it down. But our little investigation today leads us to a very unusual suspect. Something called a geomagnetic storm.
Okay, so what in the world is a geomagnetic storm? Basically, it's a massive planet-wide disruption of our magnetic field. You see, the sun is always sending out this stream of particles called the solar wind. And when that wind gets super intense, it just slams into our magnetosphere. That's Earth's protective magnetic shield.
A really great way to picture this is to think of it like a giant sneeze from the sun. Seriously, the sun lets loose these enormous bubbles of plasma. They're called coronal mass ejections, and they rocket towards us at a blistering 2 million miles per hour. When they finally hit, they basically make our planet's magnetic field ring like a bell.
So, okay, we've got these massive solar events happening, but what's the link to your stock portfolio? Well, the first clue isn't in finance at all. It's actually in human biology and psychology. It's all about how these storms affect us.
It turns out, a whole lot of research has actually documented a direct link between these solar storms and our health. And we're talking about very real, measurable effects here. People feel more anxious, their sleep gets all messed up, their moods change. It can even negatively impact our central nervous system. This isn't just speculation. This is documented science.
And if you want a number to really grab onto, one study that the Federal Reserve paper points to found that hospital admissions for depression shot up by over 36% during these intense geomagnetic periods. The big takeaway here is that these storms can literally put huge numbers of people in a bad mood.
All right, so the sun can make us feel down, fine. But why on earth would that make someone sell their stocks? This brings us to the motive in our little cosmic case, a fascinating psychological quirk called misattribution of mood.
Misattribution of mood is pretty much exactly what it sounds like. It's when you feel bad or anxious or pessimistic for one reason, but you end up blaming it on something else entirely. You feel kind of off, but you have no idea it's because of a solar storm. So your brain starts searching for a reason, and it might just decide the problem is the economy.
And this all builds up to the paper's central hypothesis. You can see it here laid out in 5 simple steps. First, the storm hits. Then, an investor's mood gets worse, even if they don't really notice it. Third, they don't know why they feel bad. Fourth, they wrongly blame that bad feeling on the economy. And finally, acting on that gloomy outlook, they sell.
It's a pretty compelling theory, right? It connects astrophysics to psychology to finance. But is there any hard proof? To find out, the researchers did what any good detective would do. They followed the money.
And here is what they found. This table shows what happened to the major U.S. stock indexes in the week after a geomagnetic storm. And just look at that. For every single index, the effect is negative. The market consistently did worse right after the sun was in a bad mood. Let's just focus on that most dramatic number. For the NASDAQ, the impact works out to an annualized negative return of over 2.5%. I mean, that is a really substantial and economically meaningful effect.
Now, what's so crucial to understand here is that this wasn't just a fluke. The researchers found the connection to be statistically significant. In plain English, that's just the scientific way of saying that the odds of this being a random coincidence are incredibly, incredibly low. There's a real pattern here.
But the story gets even more interesting, because the effect wasn't the same across the whole market. The researchers also identified a specific modus operandi, basically a specific way this whole thing operates, and who it hits the hardest.
So to get this, you have to look at the 2 main types of traders. On one hand, you have individual investors, people like you and me, and our decisions can be a bit more influenced by emotions. On the other hand, you have these giant institutional investors who usually have to trade based on very strict preset rules. The paper also points out that we individuals tend to own more stock in smaller companies or small caps.
And wouldn't you know it, the data totally backs this up. When they broke down the results by company size, the negative effect from the solar storms was by far the strongest for small-cap stocks, exactly the kind of stocks held by individual investors who are more likely to trade based on a bad mood.
So, after laying out all the evidence, what's the verdict in our cosmic detective story? Well, the case is surprisingly strong that there is a very powerful hidden force at play in the markets. Let's just do a quick recap of the case file. The mystery? Unpredictable market movements. The clue? Solar storms mess with our mood. The motive? We blame those bad feelings on the wrong thing. The evidence? Consistently lower stock returns after a storm. And the MO? The effect is strongest on smaller stocks, the ones favored by us regular folks.
And remember, this whole analysis isn't some conspiracy theory from the internet. It comes from a super serious source, a 2003 working paper written by economists at the Federal Reserve Bank of Atlanta. This is a real, data-driven investigation into what's hiding behind our financial behavior. Which, brings us right back to where we started with the opening line from the paper itself. The researchers set out to tackle one of the biggest puzzles in finance, and they found a potential answer literally written in the stars.
And that leaves us with a final, much bigger question, doesn't it? If something as distant and seemingly random as a solar storm can subtly push thousands of people into making different financial choices, it really makes you wonder, what other invisible forces are out there quietly shaping the thousands of little decisions we all make every single day?